For decades, we've all heard the same thing. Go to college, get a good degree, and you are set for life. But what if that promise, what if it's starting to break for more and more people? Today we are digging into the real cost of a modern college degree, and we're going to ask a really tough question. Is it always the amazing investment it's cracked up to be? Okay, let's get into it.
Man, this quote just hits hard, doesn't it? Because it perfectly captures a feeling that so many recent graduates know firsthand. It's that awful sinking feeling. You're trapped. You've got this mountain of debt on one side and a job market on the other that doesn't seem to care about that very expensive piece of paper. And look, this isn't just some hypothetical. For millions, this is real life.
And that really gets to the heart of what the source material is calling the degree trap. It's this wild idea that the one thing that was supposed to guarantee your financial future, that college degree, might actually be the very thing holding you back. So we're going to take a look at why this is happening and what the actual numbers say about the return on this massive, massive investment.
So to really get this trap, we got to ask a big question first. How in the world did college get so unbelievably expensive? I mean, it's not just your standard inflation or paying professors more. No, something else is going on here. Something that feels a lot like a campus arms race that has sent costs into the stratosphere.
And this is where it gets kind of wild. The money isn't just going to, books and better classrooms. No, universities are now competing for students based on lifestyle. It's called the amenities arms race. We're talking about building literal resort-style facilities, lazy rivers, massive rock climbing walls, luxury dorms that look like fancy hotels, complete with gourmet chefs. And if that's not enough, there's also been this huge explosion in the number of non-teaching staff, a thing they call administrative bloat.
Right. It's the multi-billion-dollar question, isn't it? Who is footing the bill for the lazy rivers and the ever-growing army of administrators? The answer, of course, is you, the student. All these insane costs get passed down, and they're funded by one thing: student debt.
Okay, so if we're going to treat a college degree like a $95,000 investment, which let's be honest, it is, then we have to talk about its return on investment. Its ROI. Is the extra money you're going to earn from that degree actually going to be more than the crushing debt you took on to get it? For a scary number of people, the answer is a flat-out no.
Take a look at this number, 28%. Just let that sink in for a second. That number represents a huge chunk of college graduates. But what does it mean? Well, the reality is pretty staggering.
And this chart just lays it all out there. According to the source, for 28% of all college degrees, the return on investment is negative. Let me say that again, negative. That means after all is said and done, after tuition, fees, and all that interest on loans, the graduate will make less money over their lifetime than if they had just skipped college altogether. They paid a fortune for a degree that actually made them poorer.
Okay, this all sounds pretty grim, I know, but this isn't about being down on education. It's about being smart about it. It's about being a savvy investor in your own future. So if that traditional path is full of these financial landmines, how do you escape the trap? Well, it starts by seriously considering the alternative path.
The source material points to a really powerful alternative: skilled trades and high-demand IT certifications. So think about electricians, plumbers, welders, or people getting certified in fields like cybersecurity or cloud computing. These are career paths where you're often getting paid while you learn through apprenticeships. You can jump into the workforce with incredibly valuable skills, and here's the kicker, with little to no debt. And when you put these two paths side by side, wow, the financial difference is just stark. The degree path, you're starting out at 22, maybe older, with nearly 6 figures of debt. The skills path, you can start at 18, with basically zero debt. Think about that. By the time they're both 30 years old, the person on the skills path has already been earning, saving, and investing for a full 12 years. The college grad, only 8. That is a massive, massive head start.
And we're not just talking about a little leg up here. That head start is a life-changing advantage. It's the power of compound interest working for you instead of against you. It's about avoiding that soul-crushing weight of debt in your 20s. This can literally put you decades ahead of your peers financially.
Let's just walk through this race. At age 22, the college grad's net worth is in the negative. They're deep in a hole. Meanwhile, our skilled professional, they're already earning. Their net worth is positive. By 30, that gap has gotten pretty big. But by 40? Whoa, the difference can be astronomical. The skilled pro has had 22 years of earning and letting their investments grow, while the grad might have spent the first 10 of those years just digging their way back to zero. It's a completely different financial universe.
So here it is. The big takeaway from all of this. This is not an anti-college message. Not at all. It's a pro-math message. It's about being smart and treating your education like the major financial decision it is. Before you sign those loan documents for a $95,000 degree, you absolutely have to stop and ask, what is my realistic return on this investment?
And ultimately, that's the question this leaves us with, right? The world is changing. That old one-size-fits-all path to success, well, it's a thing of the past. There are so many different ways to build a successful life and a fulfilling career. So, looking at all the options, the real costs and the potential returns, how will you invest in yourself?